Hey guys, hope you're doing well. I actually stumbled upon my grade 10 mark sheet and I realized how many useless concepts I learned in school. Now, obviously, for some people, they were pretty useful: trigonometry, chemistry, physics. For those people who have gone in those fields, it was definitely very useful. But for me, I don't think any of that applies today. And one other thing was I was thinking about it. One important concept that every school misses out on is money management, personal wealth management. And even if you teach compounding, and if you teach a simple concept of putting away some money and investing it in the market and letting it grow, that could actually make you wealthy. That's not necessarily taught. Now, to be fair, some of my classes did teach me compounding, but what I can remember was that they used to teach compounding in a very negative connotation. The problem always had me borrowing some money and then I had to pay the person back, and how compounding, works. And that gave a very negative connotation about compounding. The other thing was, I think it's one thing to say if you put your money at a 10% return in the market in perpetuity. But I think a lot of courses do not teach about what does that mean when somebody says invest in markets. What do stocks and bonds and all these kind of things mean? I think a simple course would do. There are some very complicated courses out there on this topic, but I think a simple course on the vehicles of investment and compounding are going to make a lot of people very wealthy, as by the time they retire or even earlier. Anyways, so I was looking at it, and then I thought maybe let's look at our portfolio. I was just looking at how it did today. Obviously it did not do well, but I think that my portfolio as is could make me a millionaire even if I do not invest a single penny of my own money anymore. What do I mean by that? Obviously I'm getting some dividends from my investments, and they've grown to a substantial number over the last 2.5 or so years. And if I just keep reinvesting my money into the market, these dividend bills that I get, if I keep reinvesting this in the market and I keep my principal, and when I say my principal, I'm using a very conservative approach. What does that mean? I'm always expecting a 40% crash. That means whatever my portfolio today is will drop by 40% if something really bad were to happen. I don't think that's going to happen, at least this time around. It may happen later down the road. But yes, you've seen tech stocks, down quite a bit already. But it is what it is. But at the end of the day, I think I'm always going to keep in mind that my portfolio is 60% of its total value. So I've used a very conservative approach. So if I keep my principal invested and I reinvest my dividends that have grown into some substantial money over the next 25 years, I could retire with $1.8 million in the future, 25 years later. Now, one would argue that there's inflation you got to factor in, and I've factored inflation into it as well. As it stands today, inflation adjusted, my portfolio could get me $980,000 or close to $1 million in real money, inflation adjusted, if I do not do anything but just invest my dividends. And that's the power of compounding. So let me show you what I'm talking about. I'm just going to walk you through some of the assumptions, some of the some of the returns that I've gotten from the market. So again, this is, when you look at it, the title is obviously very catchy. The power of compound interest. Could my portfolio make me a millionaire? And I think it will. I have full faith in the markets and the fact that if I be consistent and consistently invest my dividends, I will be a millionaire in 25 years from today. So let's look at it. Okay. So what I did was I went in, and the table that you see on the left, I went in and charted the amount of dividends that I've gotten per month over the last 2 years or 3 months or so. I started investing again back in September 2019, and I got my first dividend of $1.30 in October 2019. So my dividends have grown from $1.30 because I've been investing in the market on a regular basis to $225.60 in December. So I've already made some good headway in terms of getting my dividend income to a level where it starts to now become substantial sum of money if invested in the market in a long period of time. So what I have here is just a representation of how, as I've kept on investing in the market and as I have kept on reinvesting my dividends in the market, how my dividend, has grown per month. Again, barely anything in October 19 to $225.60 in December 2021. So what I have on the right here is a representation that the maximum dividend that I've got in any given month is $225.60. If I look at all-time average, if I were to average all these months, I've gotten $88.22. If I look at 2021 average, which I think is a good representation of my monthly dividend income, it's at $114.59. Now, this is how it stands as of today. This is only going to grow because I'm not going to stop investing in the market. I'm not going to be rash about it, but I think if I invest in ETFs and safe stocks, value stocks, safe stocks, the stocks that actually make money, I think I'll be able to grow this much more than where it is. My goal is to get to $500 in dividend income per month. So you can see how big this is going to be, because the big reveal is actually next. Okay, so I said, fine. If I stand where if I am, if I don't put any new dollars from my own pocket into the market, what would that look like? If I were to sort of take it 25 years from today. So what I've done is I've actually put the link to this calculator in this presentation. I'll also put it in the video itself, so you can go and actually try it out. It's pretty cool. It's very simple. There's not many bells and whistles out here. I just wanted to see if I invest $114, and what's the $114? That's basically the dividend per month dividend that I got in the year of 2021. So that's $114 per month. I'm going to take it and I'm going to reinvest it back into the market. Rate of return, I've assumed to be 10%. You could make it 8, you could make it 6, you could make it 12. I think 10% is a good representation because that's historical. And you could be conservative with your approach. I think this is, probably the right average. Again, I've used 10%, and I've said 25 years from today, my investments would yield $1.8 million. What have I used as a principal? My current portfolio value is $230,800. Obviously, there was my portfolio fell again quite a bit today, but that's okay. I said, I'm going to assume that I will, if it keeps crashing and it crashes 40% from where it is today, it's going to be $138,480. That's the value that I'm using as a principal. And what's invested in the market today is $238,800, almost a difference of $100,000. But I am going to be conservative with my calculations, and I'm going to use $138,480. And I'm assuming a 40% crash. So you can see that this is quite conservative approach. That gets me $1.8 million 25 years from now, and I'm not even looking at putting any more of my money. I'm expecting my dividends come in and I put it back into the market. I think the dividends are going to grow. Even if I just go with this approach, but I've not taken that into account. I've also not taken into account that I will continue to save 20% of my income, and I will continue to feed that into the market for the next 25 years. All right. One other thing was there'll be some naysayers, as I was mentioning, and there'll be like, $1.8 million in 2047, 25 years from today is going to be nothing. What about inflation? And you got to take care of that. And I said, yeah, that makes sense. So I did this calculator. I used this calculator, did this calculation here. If you look at the link again for the inflation adjustment, now you will see that the average inflation rate used here is 2.5%. We are in a much more inflationary environment, but I think Fed's not going to let this 6%, 7% run forever. And I think we are going to go back by hook or by crook to that level of 2% or 2.5%. And that's been also a very historical, inflation. As a matter of fact, historically, if you look at historical rates, this is actually quite high. So using that, I would be $100 would mean $54 in today's terms. What does that mean? That whatever money I'll have in 2047, that will lose its real value by about 46%, and I'll only have 54%. So if I have $100 in 2047, if I'm comparing it to today, I should actually almost halve it, and then have that number in mind. Either ways, what I'm trying to illustrate here is I would have $983,000 in 25 years, real money adjusted for inflation, if I were to just let my dividends of $114 go into the market, do not put even a single new penny from my pocket, and I keep my principal, in my mind, I keep it at a very conservative number. That is 40% of, 60% of the value that it has today. I really hope to God that it doesn't fall that much, but if it does, I really don't care. Actually, I care every single day, but I keep telling myself I really don't care. But you know what? That it is, part and parcel of investing, I guess. And as I mentioned, psychological, strength in this game is more important than actually understanding, company analysis and so on and so forth. You don't need to invest in single stocks. You can always invest in ETFs and let the market do its thing. Again, I'm very happy that I've gotten my investments to a point where I can actually expect this to make me a millionaire, in 25 years. And you know what? I'm not going to stop, because now I've understood what this investment game really is. I'm going to keep pumping as much money as I can into the market, and therefore, I think I'll end up with bigger returns. I think, by the virtue of being in the United States of America, I have gotten a golden opportunity to build generational wealth that my family, which quite a bit of it still lives in a village in India, has not had a chance. So I owe it to them that I will create this wealth for me and my family. And as I go along putting these videos and charting my course, I hope some of you take advantage of this as well. And if you are young, in your 20s, oh my God, you guys have so much going for you. You don't even have to go into a crazy lucrative career. You just need to go into a place which gets you decent money, and you can take some decent amount of money and put it in the market. But anyways, that's my video for today. Markets were not good at all. I think I'll get you an update sometime later this week, or maybe next week. It is a little bit painful. But anyways, thanks for listening. Take care, and hope to see you again soon. Take care. Bye-bye.